Finance and Freedom, where I share simple steps that helped me as a single income family making less than six figures a year, got out of all of my debt, paid off $92,000 worth of debt in less than 12 months. And I share simple things that help move you forward. I've gotten some questions about stocks and timing tradings and things like this. Now, if you haven't invested in the stock market, don't leave. Please take $10 and instead of buying something at Starbucks, open up a brokerage account and buy something. Buy something that will grow in value. Now, if you've been with me for a while, if you're in my free Facebook group for women, you know that we do little things to move you forward. And I want to talk about trading and timing. And I want to tell you something that all the videos you see are not going to tell you. Okay, they tell you multiple steps ahead, but they don't give you the entry point. And I'm here to do that. So first of all, I'm going to recap. Open a brokerage account, 10 bucks. You know that you've wasted $10 somewhere along the month. Look at how much you've wasted on, those things that you really don't need. You've probably spent extra money on things that have gone down in value or that you've just consumed that were not necessary. And that's okay. But think about if you took that and started to make it grow. Take your entry point in. Now, if you've already invested something in the stock market, got a great question from Beth about how do I know when to sell a stock? How do I know how to create an exit strategy? So this is a great question, and I'm going to give you some simplicity about it. Before you think about an exit strategy, you have to have an entry strategy. What is your entry strategy? Now, before you have an entry strategy, you need to figure out, what are you buying? What are you buying? Why are you buying it? What do you hope it will do, performance-wise? What do you hope it will do for you? And what is the time period that you want that to happen realistically? You're going to look at past performance, even though that they always say past performance is not an indication of future performance. But again, you want some history. So let's take 3 examples. Got to give you one more tidbit there. This also depends on your age. So if you're an 18-year-old and you're looking to build a retirement account, you've got 42 years of the market going up. Your entry strategies are not as critical. But if you're in your 50s and you want to retire in your 60s, then you're going to need a little bit more wisdom because you don't have time. That time factor covers a multitude of sins, so to speak. Okay, so you need to know your strategies, what you want, what your ultimate financial goals are, how old you are, how long it's going to take to reach them. Then you're going to analyze the strategies. Now, one main strategy that everybody should have is investing in some blue chip stocks. These are the reliable stocks. These are the pillars of the financial world. And go ahead and Google what's a blue chip stock. All right, you'll get plenty of examples. These are ones that typically go up in value. And if you're looking at those stocks, you have things called dividend kings, dividend champions, dividend aristocrats. If you are looking for a stock that's going to pay you, then you want to look for those categories in that blue chip. Okay, so that's one type of stock. Now, for that particular stock, the entry point doesn't matter as much because typically these are things that you're going to hold on to forever. There is no exit strategy. You want to hold them. You want to build your portfolio. Typically, there's not an exit strategy. If you're receiving dividends, then you might want to turn the dividends off of DRIP, which is a way to reinvest a dividend that you're paid to buy more stocks. That is awesome. There might come a time where you feel like, hey, I don't want to sell the goose that's giving me the golden eggs. I don't want to sell it, but I'm going to turn off DRIP and just have the check come to me. Again, there's no exit strategy for selling that blue chip stock. Now, if the company falters and you think, oh my gosh, this blue chip company is going to go out of business, well, then obviously you probably don't want to hold on to it. So you're going to have to keep up on the news a little bit. You're going to want to know what's happening with the blue chip company. All right. So there are, big names, Coca-Cola, McDonald's. I don't know if McDonald's is publicly traded, but here's a tip. Here's a tip. If there is a company that you love, that you use, that you see is popular with the kids or with the adults, whether it's you see Hondas all over the place, you might want to Google, is Honda a publicly traded company? Which it is. And you might consider buying some of that stock or Lowe's or Home Depot or whatever's around you, something that you're familiar with. Check it out. You might want to buy some of their stock. All right, the next category is high dividend paying stocks. There are people that want the dividend and they want a high dividend. And we're talking above 5%, 5 to 7 to 10%, some even 12 to 15. These are paying a high dividend. They're more volatile. The price goes up and down based on the stock market for things like that. Again, if you're 18, the entry point doesn't matter. But if you're older, you might want to wait until the market's dropped. If you are watching this today, it is October 16th. The market had a huge drop, and today was a great day to get some things on sale. So if you're looking to invest, you might want to wait for those market drops to where you can get some things at a lower price. Okay, may not make that much of a difference if you're planning on holding the stock for 5, 10, 15 years. It's all going to balance out. And if you are buying those to receive a paycheck, you are probably not going to have an exit strategy. You're probably going to keep those stocks under your belt and receive the dividends and eventually turn off the dividend to have a check sent to yourself for retirement. These companies that are paying a high dividend, some might be in the high dividend aristocrats, kings, champions, but typically they're not. So you will want to keep an eye on the company a little bit more than you would a blue chip stock because something could happen where a company could dissolve or be in trouble, and you want to be aware of that. You want to be aware if they are reducing their dividends. That might be a warning sign. So with those type of stocks, take a look at it. What did you buy it for? Um, what would be the circumstances where you would want to sell it? These are the questions you ask yourself. If they completely shut off paying dividends, that that might be a signal to sell that stock and look into something new. So again, you're asking yourselves a bucket full of questions. And finally, you might want to buy a stock. You hope it's going to go up in value, doesn't pay a dividend, but you want to buy it, hold it, sell it for a profit. Now, that is the third type that we're talking about. And with that particular type of stock, you really want to have an entry strategy and an exit strategy because it's a speculation. And if you are speculating with your portfolio, let's say you have $1,000. You probably don't want to spend more than 1,000. Probably don't want to spend more than $100 of that in speculations because you could lose it. If you have a $10,000 portfolio, then hey, maybe 1,000, 2,000, you might want to play around with that. That's where you really need the entry and exit strategies. Uh, Something called a stop loss. You might want to Google what a stop loss is and how to use it. You can buy some stocks, and in most brokerages, you can get a notification if the stock price drops by 10%, 15%, 20%. And you have to decide based on the company, am I going to sell it? The stock just dropped 20%. Oh my gosh. Am I in trouble? Am I going to lose my money? Let me get rid of it so I don't lose any more. That might be one strategy. Another type of strategy is wow, the stock dropped 20%. I'm going to buy a lot more because now it's on sale. So, two completely different and opposite strategies. And as you're developing your strategies, you have to ask yourself, am I comfortable with risk? And if so, how much risk am I comfortable with? How much am I willing to play around with? How much can I lose and still be able to sleep at night and pay my mortgage and pay my bills and those type of things? So again, entry and exit strategies depend on a lot of factors. I hope this helped. If it did, let me know. And if you have more questions about this, let me know as well. So stay strong, keep the faith, keep the focus, and I wish you prosperity in every area of your life.